Hi, good afternoon, everyone. This is Kumar Subramanyam from the Global Investing team. In our ongoing series of webinars that we are doing to both educate and inform the Indian investor about global markets, this is the third such webinar we are conducting in this series. In case you haven't seen the previous two webinars, please go back and do see these webinars. The first one talked about in general about investing in US markets. How do you go about investing? What are the benefits of investing in US markets? And it also spoke about why use the global investing platform. What are some of the features, some of the advantages that the global investing platform provides compared to any other platform that's out there. The second in the series, we spoke about ETFs, which has been a very popular instrument on the global investing platform since its launch in the last 4 months. We've seen a huge uptake of people who want to build a diversified portfolio, and hence, instead of stock picking and invest in specific equity stocks, what they do is they pick an ETF which tracks an index or any such underlying asset and invest in that. In continuation with this series, today we are going to talk about fractional stocks, which again is a fairly unique feature in the US markets. It is a feature that exists in Indian markets as well, but it's not a very investor friendly feature, so to speak, in Indian markets. And as we go through the presentation, I'll explain why. Whereas in US markets, this is a fairly commonly used feature by investors. This is a fairly commonly uh, provided feature by brokers and partners, because for two specific reasons. Specifically, so just to start off with, as the name suggests itself, fractional stocks is nothing but the ability to invest in a fraction of a stock rather than one whole unit of a stock. Most of our basic education in finance has taught us the basic unit of a stock is one unit, whereas fractional stock to some extent does away with that constraint and allows you to invest in fractions of stocks. It can be a fraction which is greater than one, it can be a fraction which is less than one as well. So there are two basic reasons why fractional stocks are available as an investing instrument today. Whenever we think of investment, we typically don't think in terms of saying I want to build a portfolio with 10 stocks of Apple, 5 stocks of Amazon, and 3 stocks of Netflix. That's not the way we think about investments. The way we think about investments is to say that I want to build a $5,000 portfolio with tech companies exposure, or I want to build a X dollar amount portfolio. So fractional stocks basically gives you the advantage of translating that dollar amount directly into an investment amount, which means that today you can say that I want to build a tech portfolio of $10,000 with, let's say, one third each allocated to Amazon, Netflix, and Apple. And I want to just on the click of a button execute this portfolio. Fractional stocks gives you the ability to do that. So it basically translates a very simple thinking around portfolio building of I want to invest so many dollars and invest into execution. The second advantage it provides is, unlike Indian markets, in the US markets, stocks are fairly expensive instruments to buy. Let's take an example of Amazon, for example. Each single stock unit is priced at $1,700. So if you have a $10,000, even if you have a $10,000 allocation to, let's say, tech stocks, you're not going to be able to buy more than 5 stocks of Amazon. Or let's say Apple, for example, is somewhere around the $250 market. So you're not going to be able to buy a lot of Apple shares if you have a $1,000 portfolio allocated to Apple. So what fractional stock does is it does away with this constraint. It gives you the ability to invest in a fraction of a stock. So with a dollar amount in mind, you can also build a diversified portfolio. And again, the fractional investing is available for both stocks and ETFs. So you can invest in a fraction of an ETF as well. You can invest in a fraction of a stock as well. So these are the two big advantages why brokers offer this as a very common feature in the US markets, and this is something that the global investing platform also offers you on day one, where you can just select a dollar amount instead of a share amount when you invest it. The second feature is that you can say that I want to invest in 1/10. You can go as low as 8 decimal places technically, but then if you go beyond let's say less than 1 cent or half a cent or quarter of a cent, then it becomes a meaningless amount. So typically we've seen people invest in half a share, 1/3 of a share, 1/4 of a share, and not go, but technically you can go to 1/8 of a, you can go up to 8 decimal places in terms of what fraction you can invest in. The two main questions that we typically get asked whenever we talk of fractional shares is what happens to my dividends and what happens to my voting rights. In terms of voting rights, you don't get voting rights for the fraction of the share that you own, but you do get voting rights for the fractional shares owned in combination. Let me explain that a little bit more in detail. So for example, if you own 3.5 shares of Amazon, then you get voting rights for 3 shares of Amazon. So you don't get voting rights for the 0.5. Now, there are some brokerage platforms which will typically aggregate the fractional voting rights and pass it on as a pooled voting right to the company. But then in terms of global investing platform itself, we've kept it very simple for the customer. We've said that if it is less than 1 share as a fraction, you don't have voting rights. Above 1 share as a fraction, you round it off to a floor amount rather than to a ceiling amount, and then those are the number of shares that you have voting rights for. Whereas for dividends, you get dividends paid out for the entire fraction that you own. Obviously, again, the constraint is that you cannot get a dividend of half a cent or 1/8 of a cent and things like that. But having said that, let's say you own 3.5 shares of Amazon, then you will get dividends prorated for 3.5 shares of Amazon. That is the way it will work. So to start off this fractional shares investing journey, I would request you to go on to hdfcsec.com/global investing. That is hdfcsec.com/global investing. Create an account. It's a very simple process. All you need to do is do a basic mobile and email verification, create an account. There's a very basic online KYC form that's available for you to fill in. It takes no more than 2 to 3 minutes to fill in. Upload a couple of ID and address proof documents. Your account gets approved within 24 hours, completely online. You do an LRS process also, that is completely online, and you're ready to invest in fractional stocks at that point in time. On the platform, you'll also see that we offer a lot of guidance for customers who want to invest in stocks and ETFs. So if you're building a portfolio, for example, you can go through a bunch of shares in terms of the analyst report, news feeds, financial performance of these shares that's available. And then once you're ready to execute on that portfolio, you just go onto the buy or sell button, and there you're allowed to enter a fractional share value, or you're allowed to enter a dollar value, and the platform will convert it to the corresponding fraction of shares that you're allowed to buy. And that's how you can invest in fractions of more than 4,000 stocks and ETFs on the platform. So just to give you a flavor of what are some of the more famous fractional stocks and ETFs on the platform, like I said, a primary goal for a lot of investors we've seen so far is, how do I diversify? I still want to own some of these expensive tech stocks because I believe in the story of the company, but then they're all on a per share basis, they're very expensive. So we've seen shares like Apple, Amazon, Google. These are some of the more famous and more expensive stocks where people have opted for fractional stocks in order to cater to their diversification targets. And in terms of ETFs also, we've seen, interestingly, people saying that I have a $5,000 budget and hence I want to invest, let us say, $5,000 in index ETF. Let's take SPY, for example, which is a spider ETF that tracks the S&P 500 index, mostly large cap and mid cap stock, or a Vanguard corresponding ETF that's there. So people have taken an approach of fractional investing where just thinking in terms of dollar amounts has been more convenient for them rather than thinking in terms of number of share amounts. So those are essentially the pointers towards fractional stocks. This is a feature that's live and it is available on the global investing platform right now. So do go visit the platform. I would recommend. If you have any further questions, we have a 24/7 helpline that's available there. We have an email helpline that's available there. Reach out to us anytime so we can guide you more around how to invest in fractional stocks, how do you build portfolios around fractional stocks. If you have a risk-based target in mind, or if you just want to follow, let's say, a popular portfolio, so to speak, in the US markets. And in terms of just growth potential, we've covered this through multiple communication channels in the past. I'll just reiterate the same thing, saying that US markets have been one of the fastest growing markets globally in the last 10 years. It's been on a long bull run. Even last year, markets grew. The S&P 500 index grew at 30%, close to 30% on an annual basis. Those are great returns. You have an ability to now participate in those great returns by investing a dollar value and having a diversified portfolio in order to mimic the larger index. So with that, I think I've covered basically my pointers that I wanted to talk about in terms of fractional stocks. What does it mean, fractional stocks? Why do people invest in fractional stocks? What does it mean for dividends and voting rights? But if you have some questions, I'd be happy to take that right now. So Shyam, if you can email me the questions that you are receiving, that would be convenient. I will open it up here at my end in case as I receive emails from you. So give us a minute or so to answer any questions that you may have. Our question taking platform is still not completely coupled with the webinar. So I will receive your questions as you post them on my email. It may take a minute or so to get to my email, and then I'll start answering this.
So we have a first question here.
Yes.
It says, what is the minimum amount that we need to invest in US stock markets?
There is no minimum account specified. For example, you can transfer as low as even $50 or even $10. But typically, the minimum account is more than being driven by regulation and what you can do. I would rather go by saying what you should do. Look at building a portfolio depending on what sort of an investor you are, where you are in your investment journeys. If you want to start off with a very small amount, allocate at least $1,000 to your global investing portfolio and start off there, because like I said, there are features like ETFs, there are features like fractional stocks which allow you to take these $1,000 or 5,000 or 10,000, any minimal amount that you have. It allows you to take it a long way. Because we see that people do basically a fund transfer of $50, $100 as a sample, just to make sure that everything is working fine. Having said that, there is no constraint at our end that you have to transfer X number of dollars. We support as low as $10, $5. But for anyone to build a meaningful portfolio, it would take somewhere around $1,000 to $5,000 in terms of global investing.
So we have one more question from Karim G.
Yes.
He's asking about how can we invest in ETFs? Can we do it in fractionals? And what is the
Yes.
procedure for the same?
Yes, so the procedure remains the same for stocks and ETFs. On the platform, you will see the list of all the stocks and ETFs that you're available. Once you've selected the stock or ETF that you are interested in investing in, you will see on the right hand side of the platform that there is a form to fill in where you enter the quantity that you want to buy, all the dollar amount that you want to buy. Whether it is a stock or an ETF, you can enter a fractional quantity, or you can enter a round dollar amount that will get converted to a fractional quantity depending on the unit price of the stock or the ETF. So the platform support both stock and ETFs for fractional investing.
So we have one question from Sharath. He's asking, if I buy multiple fractional stocks, for example, 0.5 of Amazon, 0.5 of Google, what will be the brokerage and what will be the fee of it's like $1,200
Yes.
per trade. How would that transact?
Yeah. So depending on the plan that you've subscribed to, we have three pricing plans in the global investing platform. There is a basic plan where there is a $6.99 commissions per trade, and there is a silver plan which has a $1.99 commission per trade. There is a gold plan as well, which has a 1 cent per share commission. Now, depending on the plan that you have subscribed to, these trades will be considered similar to a full trade, which means that whether you buy 0.5 of a share or you buy 10.5 of a share, it is still considered one trade. So you will be charged a per trade amount that is there. In the case of the per share, if you have subscribed to the gold plan, which talks about a 1 cent per share, then it gets rounded off to the nearest share, and that is how you're. So if you have, if you're investing in 3.5 shares, so you will still be charged 4 cents as commission.
We have one question from Mr. Vigneshwaran. He's asking, should we do any sort of currency conversion before buying the stock, like Indian rupees to USD?
So let me explain the process again. The way it happens is, the first step is you open a brokerage account with our US partner. The second is you do a fund remittance from your Indian bank account. We have made the process completely online for HDFC, which means that you can just go onto the platform, select HDFC bank and fill in that form, enter the dollar amount that you want to do a fund remittance for. So the fund remittance process is typically a one time or a two times. Maybe people will remit funds once, twice, or thrice a year to their brokerage account. Now, once that is the only time that the currency conversion applies. Obviously, the currency conversion will also apply when you withdraw these funds back into India. But however, on a per trade or a per transaction basis, you don't need to do any currency conversion because the funds are lying as a dollar value in your brokerage account. You are buying at a dollar. You're buying for dollars. When you sell, you get dollars back into that account. So currency conversion is needed whenever you're doing a fund remittance from India to US or doing a fund withdrawal from US to India, but not when you are transacting.
There's one more question from Mr. Mehul Shah. He's asking, is global investing legal as per Indian laws, and how would the taxation would be taken in the Indian context?
Very valid question. I think that's something that's comes up usually as a first question when we interact with customers. Is it legal? It is 100% legal. Large organization like HDFC Bank and HDFC Securities have done their diligence on the process, on the platform, all of that. It is completely legal. What RBI allows every Indian resident individual is that there is something called as a liberalized remittance scheme by RBI, which allows you to remit funds of up to $250,000, which is 250,000 USD globally. This is not just for US markets, but you can remit this fund globally anywhere, and you can remit it for a few purposes. For example, one of the purpose, and that is where if you look at our online LRS form, the purpose code is already put in, which means that there is no way you can make an error over there in terms of selecting the purpose code. The purpose code is S0001, which is for investing in portfolio investments of equity globally. So this is completely legal. This is approved by the RBI. This is under the LRS scheme of the RBI, which caps the amount is $250,000, which is $250,000 of investment that you can make from India into global markets on an annual basis, which means every individual is allowed to do that. So if you have 4 family members, 250,000 into 4, which means roughly about up to $1 million you can invest in global markets from India. It's completely legal. In terms of taxation, the way the taxes are divided into 2 parts. Again, there are gains, there are capital gains that you make on your investment, and then there are dividend earnings that you make on your income. Dividend earnings, they are tax deducted at source, which means that whenever there is a dividend payout by a company or an ETF that you hold and that hits your account, the broker has already deducted a 25% TDS and remitted the balance dividend amount into your account. You get an acknowledgement for this dividend online on the platform, which is called a W8 Ben form. It can be downloaded on the platform. Whenever you're filing returns for in India for your income, you just use the amount over here so that you can offset this tax that you have paid against any tax liabilities you have in India. In terms of capital gains, India and US have a double tax avoidance agreement. They have a DTA agreement, which means that you get taxed only in one of these 2 places. In this case, what happens is till you get the funds back into India, you're not taxed, which means on a per transaction basis, you're not taxed. Once you remit the funds, and only when you get the funds back into India, you are taxed for the gains that you have made. Depending on the duration of how long over what duration you have realized these gains, you're taxed at either a short-term capital gains slab or a long-term capital gains slab. Short terms are at a marginal rate of income tax, and long-term, depending on the asset that you have invested in, it can be 0%, 15%, 20%.
The next question is this only for resident Indians or NRIs also can invest through this platform?
NRIs also can invest through this platform. What we have done is we have simplified it a lot for resident Indians, which means that your ID proof and address proof, we understand whatever documents you have to give. In the case of non-resident Indians, they can provide an ID proof similar to like an Indian passport, or if they already have a PAN or here, they can provide that. In the case of the address proof, they can again provide one of the address proof documents that we have listed. We have 4 options on the website, if I'm not mistaken. You can pick any of those. So NRIs are also allowed to invest in this.
Last question, I think, is can we withdraw the sales proceed in foreign exchange when we are overseas?
Not yet. Let me answer it that way. Not yet, because as you understand that when you do the LRS process, you have already declared saying that I am transferring these funds for a portfolio investment abroad. Like I mentioned, there is a purpose code with which you transfer the funds abroad, which means that you have sent it out for the purpose of equity investments. So whatever gains you realize and whatever the principal amount is, you have to bring that back into India. You can't withdraw these funds. It is not like a bank account. It is a brokerage account that you have opened there. So you can't withdraw these funds there. Having said that, we do have an exciting product offering in the pipeline, which is called as a cash management account, which based on the same KYC that you have done, we'll be able to offer you some sort of a cash management product in the future for these funds that you have remitted. But let me not jump the gun there. Once we launch this product, we will update all our customers about this cash management product. But as of today, the funds that you're remitting are for equity portfolio investments in the US, and the capital gain and the principal will have to be remitted back into India. They're not meant for any other expense that you can withdraw and carry out in the US or any other country.
There's one more question which says, if you for every transaction that we do we need to fill any forms with RBI or any other government organization?
No, you don't need to fill in the form for every transaction that you do. Only see the taxation impact. RBI only monitors one thing: are you within the limits of LRS? Which means that have you hit your $250,000 limit for transferring funds, and when have you got back those funds back into India? That is the only thing. In terms of your income tax, you are needed to file these taxes only when you realize the gains on your investment that you have made. So for every transaction that you do, you really don't need to fill in any form here in India.
I think that's all we have. That's all the questions that we have for today.
Okay, thanks, Shyam, and thank you everyone for attending this. Once again, I'd remind you, we're happy to take any more queries that you have, either around ETFs, fractional stocks, some of these ongoing webinar themes that we keep running, or global investing in general. So please keep visiting our website, do register, create an account. I think this is a great opportunity and a great time to expand your portfolio globally. So look forward. Thanks.